Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 15th of October, 2020. This is episode number 1859. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off sentiment across the board here. The Bund is the leader today on my futures board, followed by the bonds. The Bund is up 91 ticks. The bonds are up 25 ticks. The dollar is stronger today. Crude oil's a laggard, down at 39.45, down $1.59 or 3.87%. 3.87%. The DAX is off 409 points. 409 points. That's pretty big. 3.14%. The Euro stocks are down 3% or 98 points, followed by the NASDAQ. The NASDAQ's about half the losses percentage-wise versus the German and European markets. NASDAQ's down 181.75 points or 1.5%, and the S&P's down 1.19% or 41 points. We're opening in a gap down, and we're in a market in retracement. Gold is at $18.99 almost $1,900, or down $7.50 or 0.39%. That's where we stand today. In the earnings world, we got the major one this morning is Morgan Stanley. Morgan Stanley beat earnings. It came in at $1.66 versus $1.28 expected. That's a surprise of 29.69%. Revenue also beat by about 9.56%. The financial market clearly is in good shape still. Other earnings, Walgreens and so on, also came out. Nothing big left for the day in terms of earnings. Looking at the calendar, we did get initial claims this morning from the U.S. Slightly worse, 898,000 versus 845,000. Import prices also came in. Empire Manufacturing missed. The previous was 17. Consensus is 15. The forecast is 12. It came in at 10.5. And Philly Fed Manufacturing Index came in very strong, 32.3 versus 13. So that's where we stand. Continuing claims, believe it or not, are still at 10 million week on week. Very high number historically. Today, we do get both natural gas and crude oil because of the holiday on Monday. Natural gas comes out at 10:30, crude oil at 11 Eastern. At the same time, we get Fed's quarrels. Fed's and Fed's Kashkari at, Fed's quarrels at 11 a.m. Eastern, Fed's Kashkari, and, ECB's President Lagarde at noon Eastern, and then at 5 p.m. we get Fed's Kashkari. Let's take a look at what was expected yesterday versus what we got yesterday. Yet again, played really well versus the plan. Pretty decent day. Hopefully you did not get hurt. Yesterday, the primary expectation is a pullback into the 1503 area, consolidate, push higher, and then resume the up move back up to the upper distribution on Monday. Remember, Monday was just a steamroller, just pushed right through on that holiday. The secondary scenario is a push to 20 right there, right in front of you. This was done pre-market yesterday. Turnover, move to 93, consolidate, push down, not 93, push down to 3503, and then squeeze through the 3500 to 93, consolidate, and then make its way down to 8280, and then the ultimate test would be 74. That's exactly how it played out yesterday. The move up was perfect. The move down was perfect. Again, they don't work out this way all the time, but it's nice when they do. Here's, well, let me switch this to a 4-tick Renko. And also turn off today's stock zones. I'm just going to have a sip of tea while it does that. Okay, so here it is. We open up and we push right to 20. 20 and a quarter. Very clean and clear. Value high, among other things. Its resistance from the prior day over here. There were several tests of 19 the day before. Remember, the day before had a hard time at 1920, 16, 15, 14 being the point of control, 7, 6.5, right? That's where a lot of those levels come in. And then it starts to push through the short from 20 per plan. It starts to push through. We get the initial bounce. We break the initial bounce. So what does it give us? It gives us this fantastic test of the mid at 10, 10 quarter. Juts around in here and then finally releases to the downside. Shorts stay short. If you remember, it's actually Zen Tea by Tazo. Amazing tea. It's green tea. Anyway, so we break below, and as those of you who are in the Head Trader channel on Convergent, I was telling you, sit tight. Sit tight if you're short. There's plenty of room to the downside, especially down at the double bottom. Remember, the Monday put in a bottom at 91 and a quarter. Tuesday put in a bottom at 91.5. So what we have here is a double bottom on the daily, a weak low. So any break lower targets at least this 91.5, 91 quarter area, right? If the market touches a price twice, many people read that as a double bottom and its strength. I read it as if the auction was strong, it would not have come back to the same spot again. So I read it as the opposite, and that's what makes a market. So hang on to 91.50, breaks the 91.50, pulls back to 91.50 right here, very methodical, and then extends down to that 80. Remember, the numbers coming down were 83, 80, 74. Right? Those are the areas. And then it pulls right back to that 91 again, yesterday's range. So in case you didn't catch it up here, in case you didn't catch it here, in case you didn't catch it on a retest of the IB, in case you didn't catch it on a retest of the prior low, you had another chance at the prior low here, although a second touch I'm not a huge fan of. And then it finally gets to 74, which was right here, and hits 72 even. Bounces right off. The trade is done. Bounces right off. Comes back to 72, 75, higher low. Look out. And then it tests again at 72.50, giving us a triple bottom or another weak low. Oh, that's not a very good W. Another weak low, and the expectation given that we could not get back into the prior day's range. Here's a test of VWAP and the prior low again. With the point of control shifted down, with the low volume node very, very clear, double distribution for the day with a very, very clear low volume node, 96 quarter or so. This clearly with the point of control at the low and an extension down, not a neutral day, we have a very high probability of a short continuing lower. Okay, very high probability. So what we had here is a reversal on the daily. So one-time framing up ended, and so the shorts will want to stay short into the close. The delta here fought this a lot. I mean, the delta ended up coming back to zero once the 74 was done, there was some buying along the way here. You could see it hit the 74, that's the bottom in Delta, and it just makes its way back to zero and positive even, plus 1,000 it finishes on the day. But overall, buyers could not defend and hold. Um, could not defend and hold these prices. And with the point of control being down, now we know we have a lot of volume down here at the low side. So as we push the 72 low, there's likely to be a strong move down at some point in the overnight session. That takes us into the overnight session. I'm going to try to make this not too long a trader bite, but there's yesterday's trading is how the auction is supposed to work. Yesterday's trading is as perfect as it gets in terms of an auction. Okay? I know that many have lost money yesterday. I get it. But I'm just telling you that the market yesterday was performing as expected. You could see support breaking, becoming resistance, coming down, retesting mid, holding, breaking support, support becomes resistance again, and so on and so forth. Good migration of value, the point of control, and the market's holding steady. So here's the open pops up and then rotates around this period until Tokyo opens is usually very choppy, and then we finally get that squish, that quick flush through this triple bottom left behind from yesterday. Now remember, we already broke the one-time framing up, so really the short term is on the short side. The intermediate term, which is the weekly, is still one-time framing up, and then the secular, the big picture trend is still up. Okay, so keep that in mind. So it breaks the low and then it pushes. It pushes into 68, which was a big area, and then it comes to what? It comes to mid and the prior low, basically in this area on this retest. It comes right back to mid and prior low. That brings us into the European Open. The Europeans come in and they squish the bid. Okay, they squish the bid here. They just blast the bid, and then off to the races we go through the European session. As I told you, the DAX is down quite a bit, over 3% this morning. And what we have here is a structure that is an impulse with a steady pullback, very healthy pullback here, about 38%. We have the point of control at the low end of the range, and it holding steady. This is very likely to continue lower. Okay, we have basically a weak low again. And so the next target down becomes 34.20. Remember, weeks and weeks, hang on one second. Remember, weeks and weeks ago, I said the market seems to be moving from 20 to 20 up here, 20 to 20 in 100 point ranges. This 20 for some reason is always in play, but you know this 34.20 down here, which is a pretty big zone, is likely to get tested this morning. Okay, so Delta's down, inventory is almost entirely short. Look for a splash higher on the open, and then look for a struggle to pull back into the range. There's a battle above us, a lot of resistance above us, and we'll see how the market treats it. Now let's take a look at the big picture real quick. Here's your trend. We have a bottom, higher low on the weekly, one-time framing up on the weekly, one-time framing up. This week is continuing to one-time frame up unless we break this. I talked about it yesterday. This 33, 44, 43.75 area. The intermediate time frame is in pretty good shape still, and what we have here is a high, a higher low, one-time framing up on the daily, pretty decent here, very strong. Remember, I talked about yesterday, I talked about these weakish structures below that don't form a strong base to continue to push higher. Although I wasn't predicting whether it's going to fall or not. And what we have here is one-time framing is broken. We have a lower high and then we have a higher low. And so today, if it finishes with a lower high, now we have one-time framing down. And the targets, the key areas to retest would be the gaps and then the point of control of 33.94, so 3,400 is in view. We're currently trading at 34.38, and that's where we stand currently. Okay, so that's on the weekly. Delta has been pretty strong. Delta remained strong yesterday. Okay, so it looks like as we're pushing down, we're likely to see aggressor buyers continue unless news changes that. We do have the election coming in 3 weeks, less than 3 weeks now, and that's gonna that's gonna come into play and kind of throw a wrench in things a little bit. But it's really important to note that the big areas to test are these big prongs on this microcomposite. Okay, back to 40, the 40 being the point of control in this region. So if we continue to push lower, then it's 33.40. That would be the next station for a balanced market. Let's take a brief look at Bookmap. Sorry, I'm on the laptop today at home on my home workstation. So pretty orderly today in the order flow. The market is really performing well. We've seen a lot of collisions along the way, just markets colliding with liquidity and doing some pretty decent tests once it does. We see a collision with liquidity, push back to the next liquidity level right here, continue to the next liquidity level, pull back, break through, pull back. Looking at the overall picture of what's happening here, we do have some stable liquidity at 34.30 area, the 34.28 looks like 28.29 area. There's some steady liquidity here throughout the session as we start to push into that 34.20 area. Remember I talked about 34.20 just a minute ago. It's got some bids stacked in front of it. Above here we have the mid-century having some liquidity, and above there we do have stable liquidity at 56 and 59. Those are going to be important scalp areas, especially if they match up with a stock zone or something else along the way. Let's take a look at what's expected for today so everybody can run off and do their thing. Let me set up these charts here for that. So, what are we looking at? So, today, clear distinction between the middle distribution and the lower distribution in the overnight. A very short-term line in the sand right here at the 50. Okay, 34.50. And that a break of 34.50 likely to push us 34.60, 68 being pretty strong resistance. Looking at what we've got today, I'm looking for an open that responds higher, pushes into the 50 here. Let me put it on here, 50 to 52. Okay, pushes into the 52, 50. And then I'm looking for an impulse down that takes out the low, takes out this weak low, and then starts to consolidate. We're likely to be in an open auction out of range. The market's still intermediate term buying, so this is an opportunity for those people who are swinging over weeklies. But I'm looking for a test of the 20 down here. There's liquidity down here. So I'm looking for a test of the 20. Remember yesterday we moved from 20 up here. That was the high. attest to this 20, consolidate, poke through, and then come back to the middle. I'm looking for this to be a um, a continuation day lower, lower high, lower low, looking for everything to value to migrate down and start working itself down and repairing the structure I talked about yesterday. That's the primary scenario. Secondary, a market that flushes immediately, consolidates for a little bit, and then finally makes it through the 20. And in that case, it's likely to push through to 13.5 and then potentially 10 or so before it comes back to the open and moves back into the overnight range. Overall, the areas of interest are 50, 50 and a quarter, 60 above there, and then I'm looking for the 68 area to be a pretty decent test. So 60, 68, and then if it gets up there, we're looking for 74. By the way, the scale is not correct here. We're looking for 74. 74 is strong resistance, pièce de résistance. 20 below, 13, 04, 04, and then the zeros, the double zeros, the 400. That's what we're looking for as a map today. Good luck, and I'll catch you tomorrow. Take care.